there's a lot of Chinese equity research on my channel, and my upcoming video is going to be on China. So, hopefully you enjoyed that one as well. So the way I think about it is, let's think about a big picture. There is cyclical developments, peaks and valleys, and then there's structural long-term developments. What we've seen this year in 2021 from the regulations is that there is going to be a structural change in how business is run. So especially in the internet space, data collection and how companies can't necessarily safeguard their data, the walled gardens, right? All of that is going to has been changed. And so investors are now finding themselves in a totally different investment environment. And for that reason, traditional valuation multiples like price to earnings, price to sales, those are powerful indicators, but they provide less signal power than they did previously, but before all these regulation changes. So here's how I like to think of it. And I'm going to discuss this more in my next YouTube video, actually. So here's a preview. I'm going to share some insight with your audience that they might really enjoy. In the Chinese internet space, the largest ETF is the K-Web index. That's the largest ETF. That's also the largest ETF for China funds, the KWEB index. And inside the K-Web index, there are the top 10 internet players that basically are the category leaders in China. Tencent, Meituan, JD, Alibaba, Pinduoduo, Bilibili. That's just a sample list. And what I've done is I've analyzed the outlooks of every single one of these companies to understand whether a rebound in this sector is coming. And the short answer is it is coming, but it will take, in my opinion, minimum 2 to 3 quarters. After 2 to 3 quarters, we most likely will see a sustained recovery. Here's why. Out of K-Web's top 10 weightings, the two major e-commerce players like Alibaba, Pinduoduo, they're currently in a very heavy investment cycle right now. They're building out their platform for 2023 and 2024. So what that means is, in return for their R&D, shareholders are seeing lower EPS growth. They're seeing lower profitability, right? And so forecasts for earnings have been slashed for 2022 for both these companies. And so what that means is we're going to need to see a return on investment from their R&D spend. But as you know, a juggernaut like Alibaba and Pinduoduo, you don't see the return on invested capital from R&D in just 1 or 2 quarters. That's a multi-quarter story, right? That's a multi-quarter story. So, those two companies, they're doing the right thing for the future, but that just does not mean that it's going to turn around in January 2021, right? So that's how I think about it. And those are just 2 examples. Another example is Bilibili. This is a company I personally am very excited about. In their latest earnings report, they met high investor expectations. Investor expectations for this company are very high, and they met them. But in order to build out their future, what have they done recently? They're pursuing convertible debt, which, as you know, leads to share issuance. And shareholders don't like share issuance. It dilutes the value of their EPS, right? And so you've got a promising fast growth company that, once again, is investing in their future. So a lot of the Chinese internet companies right now are investing heavily so that regulation doesn't necessarily stop them from growth. They're investing in their future. That's why we're seeing estimates get slashed. That doesn't mean that this sector is dead, far from it. It just means that people have to realize that structurally, expectations have come down. However, the long-term trajectory is still higher. And I think the China growth story is incredible. I think that with the kind of economics that China has, it's a very compelling place to invest. I think it deserves a spot in a lot of global portfolios. Of course, if you're US focused, then perhaps you don't have an allocation in China. But if you want a global equities allocation, I just find it very difficult to not have any allocation in China. Another example, which I will talk about in my next YouTube video, is Tencent. They are the juggernaut of Chinese internet. And in their latest earnings transcript, they talk about how regulation will have incremental impacts going forward. So all retail investors are very scared of regulation, but when you dig into the source, when you understand where their future is going, actually the CEO of Tencent, they believe that the regulation impact will be incremental going forward. And that implies that in several quarters, once their growth is back on track, institutional investors will dip their toes again. This is not an overnight kind of turnaround. I think that this will take several quarters, but I think that this is the time to start researching, start accumulating, start really understanding where this sector is going, because there is a lot of promise once this multi-quarter investment cycle in their platforms have come to fruition.